Hello, this is the Chart Profit video, over an hour and a half into the trading day on Friday the 11th of November. This is from the pre-open, looking at the E-mini S&P future. Just to have a quick review here, back at the start of the month we've been talking about 2087 major support level for the E-mini, and we said if there's support there, the major point of control should price fall again, which it did, and that level is down here. And certainly we know overnight and the evening following the election result, there was incredible volatility with the S&P, the E-mini, way down 2028 something. But in the day session, actually this level has held pretty much. In fact, no value areas printed below that. I call that support. So we had this incredible kind of volatile session with the market generally, US major indices, closing higher, in fact, after that incredible decline. And I talked in here pre-open on Thursday about the 6-month point of control on the E-mini has migrated to 2159.50, which is this level here. And I said the current distribution that began in June now has a point of control at 2159.50, and I said this is a logical price for the point of control to emerge as the distribution completes. This suggests a new distribution, in other words, a directional move may be about to begin, and so price relative to that level, 2159.50, is extremely important. And I've also said the E-mini has shown strong resilience and bounced a long way back, but price below that level would not confirm strength. So even though we've come a long way back, price relative to this level, 2159.50, is very important to me in terms of gauging where we go from here. I said a big positive, and the best outcome would be significant buying marked above that point of control. I reiterated that today. Thursday's session was printed entirely above that level. Oh, sorry, not the session, the value area of the session. There's been some technical improvement. The breadth numbers have improved. The pulse chart slightly improved. Price being most important. At these current levels, I want to see price back above, let's say 2160. Price below that makes me a little nervous. I'm just of the opinion that there's a directional move, a new directional move coming, a new distribution. Okay, I think that's as plain as I can be. And just looking at the live E-mini on a 30-minute basis, that's the level I've been referring to. We're just printing below that at the moment. There may be some consolidation, as we're seeing here on the half-hour basis. That may continue a little. May see that point of control even migrate a little lower here somewhere. But I'm thinking significant selling marked below that level or significant buying marked above it will mark the start of the next directional move. That's my thinking at the moment. In the recap I did on Thursday, we sort of talked about IWM, Russell 2000 ETF, and its major point of control at 115.35. It was a local level, this being our key chart, key level going into this week. There was a very clear support at that level late last week, and the Russell has rallied really strongly from there back up to test the September highs, as indeed has the diamonds. We're looking at a new high here, all-time high. New level of support on this chart is here, 181.58. That is now the 12-month. That migration of that point of control occurred on Monday here. The rest of the week spent above that level. On the Qs chart, 117.25, that's the 1 year point of control. And we've seen real relative weakness in this chart this week. Not much higher than it closed at the end of last week, to be honest. Technology stocks dragging that ETF back. You can see here in the tech sector, XLK, it actually remains in a weak price location, unlike all the other charts we've just seen. And below this level, which we've had marked for a while, just 47 dead. That's the 1 year. This is the breadth chart for New York. Breadth indicators through Thursday. These two bottom indicators that we follow actually moved just barely back into what I call supportive levels. The percentage stocks greater than their 50-day moving average in my list, just above 50. Net new highs 25, 5-day moving average just above 0. That combination just eking out a little bit of green here on the breadth indicator, and we have the daily price oscillator, the momentum heading up towards 0 at the moment. So this looks slightly better than it did last week at the end of this week. And as you can see here, we have held the major on the spider chart at 209.90. Don't need to tell you if this turns red and this turns back down and we see price underneath here. That would be a big negative in the longer term for this chart. US index charts relatively the strongest. We're looking here at the FTSE 100 index, UK's FTSE 100, and we've talked about this level here, or this area of price here, 6-month point of control, 7-year, 68.54, 68.23. FTSE's found those levels really attractive. We're actually printing weak at the end of this week, again barely up on the close last Friday, and in a weak price location down here below these levels. Pound hasn't helped. There's been a rally in the pound against the dollar and other currencies this week, which the large cap FTSE 100 doesn't relatively respond to very well, but nevertheless we're in a weak price location here for the UK. The German DAX finishing the week in a stronger position than that, above its halfway point here. 10.545 is the major half range on this chart, and currently we're holding above that in a strong price location. So Europe a bit mixed between the UK and the German chart there. Back in the pre-open here, my version of the Ridex assets ratio was lower at 5.46. That's a 67-day low. We're looking at the sentiment here. Here's the chart, and you can see the ratio at that low. Quite a sharp decline from the previous day. Not important enough to single out as an obvious contrarian buy signal. We're only talking about 2 or 3 months, unlike this one over here, which at the time was the highest ratio in 7 months. That came very close to the top. So the Ridex traders not responding very favourably this week, whereas in the public poll from AAII, I noted that the bulls percent in isolation, that spiked higher to 38.9%, up from 23.6. That's quite a jump, and that's actually a 12-month high. So bullish sentiment at a 12-month high in the public poll. How much of that came in before the election? I think this is released Tuesday or Wednesday, and measured over a week, so not sure on that, but either way a 12-month high in bulls percentage was recorded. Investors intelligence, bulls percent slightly higher, bears percent slightly higher. 4-week moving average here of net, bulls minus bears, in black at a 22-week low. Not particularly useful information, to be honest. Lipper US fund flows, reported equity funds including ETF inflows of 265 million, which is pretty neutral, and again not particularly useful information. Looking here at bonds, we're talking about bonds, and particularly this level here, 130.77, the 3-year. We know this pattern was a weak pattern, and the rally back to the 4 months, and then the sell-off down to the 3-year, and we closed below that for a couple of days earlier in the week, Monday and Tuesday, and then this terrific decline, largest 2-day decline in TLT I think in its history. At the moment it looks like a perfect example of a falling knife. We're kind of flat today, big support down here at 117.15. We're between this big support here and this big resistance here. Only reason I can see for buying this thing is simply it's fallen so far, and that's usually not a very good reason. If I really struggle to find a support level, you can do it here on the monthly chart from the low in 2013 to the top. We've got the halfway point here. You can see from the long-term chart that this low really isn't the one to be keying off. It's actually this one over here. Brings the halfway point into here. Now the most obvious support is 117.15, the major point of control on this chart. This is the GLD, the gold chart, the gold ETF, the major at 119.84. Today we've seen that support broken rather convincingly. We're down somewhere between 2 and 3% today on this ETF. In terms of its price relative to that level, we're in a really weak position here. Next level of support is about 115.5 down here, which is the halfway point off last year's low to the subsequent high. It's also previous support at here and here. Looks likely to be tested. Price back below or below 115.5 down here would be extremely weak price location, and you would expect further falls. And this is a key chart. This is United States Oil Fund, USO. Broke below its major, which is at 1078 a few days ago, early last week. Stalled a little at this halfway point, which comes in from the February low earlier in the year, and right now at the end of this week we're printing below that level again in a really weak price location for oil. and just generally for equities risk on, it's better to see oil in a strong position rather than a weak position. That's where it is at the moment. The other side of the gold and the oil coin is the dollar, and here's the dollar index, and we're up around, or back up around October highs at the end of this week. Really strong turnaround like equities for the dollar index, and you can see that reflected here in the Euro FX chart relative to our levels, which the main level being the 4-year at 111.65 up here. Just a brief volatile spike above it, quick rejection, and we're now trading down to a new low below this halfway point. Again, really weak price location for this chart. Euro pretty weak at the end of this week. The other strong currency at the moment is the pound. This is the pound relative to the dollar, and last couple of weeks we've seen a pretty strong rally for the pound, up from 121 up to 126.27. Sorry, make that 125.26. Trying to claw back some of the ground it's lost since the Brexit back in June. Still waiting for that higher low on the Australian dollar chart above spot 76.50. I'm looking for that kind of pattern. Nothing like it at the moment. Back in a weak price location below these two major levels with a strong dollar. Did say it might not be yet. Just really interesting levels here, and price relative to that band of price to me determines if it's in a strong or weak position. So I'm looking for something, as I said last week, like an oscillator low above it. Right now, that bullish idea for the Australian dollar is on hold. This is a half-hour chart of the Australian dollar, and the gold, cash gold in red, very correlated and both heading lower at the moment. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.